Hello traders, and welcome to another weekly Forex Market Forecast. In this week we're going to have a look once again what we can expect for the next week ahead. As you have seen over the last week, the market was aggressive as we have been expecting, and most of the moves we have been mentioning, they have been able to take place. So now we are going to see what's next and how some of you can trade the market. Of course, for detailed analysis you should become a member so you can get levels, timing, and how we analyze the market and which instruments are actually the ones we are looking to trade and which ones are the ones that we avoid. So let's begin with the dollar index as we usually do. We have seen the trend lower from the 1st of May over here from this extension area as we have been mentioning, and now the market is getting into a phase of consolidation, so we can expect some moves like that within this week. So the whole week is going to be wasted doing something like this over here, something similar to this move over here, before the market will be ready for the next drop later down the line. So the next week, it looks overall to be a calm week in terms of at least the Forex market, with the dollar index being in this sideways move before it gets ready for the next move lower. For the dollar yen, we have got the move lower as we have been expecting from these extension areas. It was about 800 pips drop, which was expected, and for the next week ahead we can see the market getting calm over here with a possible bounce. And then what's next? Of course, it could be more downside. This is something we have been explaining to our members over the last week, what to expect in the dollar yen. Once again, you should be considering becoming a member so you can see exactly the levels and how we analyze the market. For the time being, what we can say is that the market will get calm over here for a possible bounce to the upside before anything else takes place. So this is what will be the overview in the dollar yen. For the euro dollar, it has moved up exactly as we have been expecting over the last week. We have recommended this buy setup over here for our members. The market moved up overall about 150 pips, 160 pips already from this entry over here. What we can expect over the next week is a possible slow move to the upside for a consolidation, and then some corrective structure can take place before the market can decide for the next possible push to the upside later down the line. So the whole next week is not going to be any volatile week for Forex. It's going to be a choppy sideways type of market in terms of Forex. So the entries were all last week. For this week, take it easy because the market will be up and down and sideways, and many of the instruments can get some correction. For the pound, we have got this move to the upside from this extension area. We can possibly see some sideways consolidation or correction within the week. It can still make a little bit more upside here, but overall this should be the main idea over the next week. So not something really interesting for trading, and the market should be set up for the next move ahead later down the line. For the pound yen, we have got this move to the downside that was expected together with the dollar yen. So right now the market should be giving us some sort of bounce and consolidation over here before it gets ready for the next reaction to the downside because of the yen strength within this cycle. So overall, this market should see more downside later down the line, but first we might see some consolidation or small bounces over here. Nothing really interesting for trading at this stage before it gets ready for the next reaction. For the EURUSD, we have got this move to the downside that we have been mentioning and expecting. Once again, this is another 400 pips move that we have been expecting. It has happened once again, and from here we are expecting some consolidation or bounces to take place first, and then later on the market should still remain weak and to the downside, and it is highly likely that we might see a break of the lows from 2nd of January 2024. So the overall bias for the EURUSD remains bearish to the downside. From the metals, gold, as you have been seeing, gold has been in a corrective structure since the 12th of April over here. We have been mentioning these levels and these extension areas over here also to the members. So we are on the lookout on a gold consolidation area over here for the next push up, which is likely to start eventually from this week in a gradual manner, and then we might see some more aggressiveness towards the next week ahead. So the overall bias for gold remains to the upside still for another push to the upside in this cycle. Oil, what we can say, another extension area. The sellers came in, the market dropped by more than almost $10 over here. This was expected again. We have been mentioning to the members over the last month. Another big move that we have forecasted. So anybody who is not in the member area, you guys are missing a lot of moves. We have been analyzing that over the last month. For here, we can expect oil to see a little bit more downside, perhaps to these areas over here. And then from here, the market will decide whether it will give us some consolidation or small bounces for the next move lower, or whether this is going to be a double correction to the upside. So to figure this one out, consider subscribing and become a member as well with the link in the description, so you stay updated in what we see in the market and how we are seeing the moves ahead of time. For this week, expect more downside in oil overall towards these levels 76, 77, which from here the market will decide how it will behave for the next move later down the line. For natural gas, we have been explaining to the members for a long time that the market from here was not ready to break to the upside. The market was still trapped within this channel. The possibilities of a double correction existed. This was the price action that took place over here. The market was at a weekly extension area where investors for long term were able to buy from here, but this was not a good price action for short-term traders. It was up and down all over the place. It was a 50-50 scenario for new lows before the next highs. So the market opens with a gap, continues higher to the next extension area. Perhaps it might attempt to fill this gap over here before the next reaction. Later down the line, we will see whether the market will be able to give us a pullback for another push up, or whether from here the market will decide to make new lows before the next push up. So both possibilities still exist for the time being in gas. So we will see later down the line which one could play out. Not something that we recommend for trading for our members. From the indices, the SPX, S&P 500 cash index, we have been expecting after this running flat to see a break to the upside. The market is giving us that on Friday and Thursday. So overall, it should remain supported for at least another $100 move in terms of the SPX. And then the market will decide whether we'll see a small correction for new highs before another pullback. So the market should remain supported over here, and buyers should still remain long from these lows over here for this move to the upside at least. And to conclude the session with the ETF section, the 3Qs and GDX, here are the 3Qs. We have been expecting after this running flat again to see a break to the upside in the 3Qs. This is the running flat structure over here. Let us put it for you. So we were expecting the market to break to the upside, which was the case from Thursday into yesterday's session over here. So the market will continue to the upside from here for at least retesting the highs from April 12th, so around the 445 area, before the market will decide whether a small correction for new highs or whether a bigger correction for another push to the upside later on. So this one should remain supported overall. And together with GDX, the gold miners ETF, it has seen a 3-swing pullback. It has reacted, it has pulled back, and now is accumulating and getting ready for the next move up, which can take this one anywhere between $36 and $38 range before it can give us another reaction later down the line. So it should overall remain supported together with gold. So that was the end of the weekend's market update, guys. Thank you so much for watching. If you are new here, consider subscribing Don't forget to leave us a like so YouTube can boost the video so more traders can benefit. Once again, if you are looking to get high quality and professional trading analysis, consider becoming a member. We have trade recommendations. We mentor our members through the live sessions Monday to Thursday. So we really try to help traders to get on the right track, because we do know that the reality of things are 90% of traders, they lose money. There is a very good reason behind that, and this is what is the point of our existence and what we are trying to accomplish to our member area. So if you have any questions, leave us a comment or send us an email at support@roiforecast.com. We should get back to you within a day's time at the most. So we are looking forward to welcome you on board and help you become a more efficient trader. And also don't forget, if you are looking for a reliable and professional broker, consider registering with our link in the description to One Royal. We don't have any benefit of doing that. We are not affiliated. So the only thing that you will benefit is trading with a reliable broker, and plus we have an agreement that you can save up on your spread or commission on your trading costs by giving you a cashback at the end of every month. So consider checking that one out. We also have a PDF brochure in case you want to check out what account types are available and some more information. Once again, anything you want to ask, don't be shy. Feel free to leave us a comment or send an email, so we'll get back to you and help you out. With that note, guys, have a good rest of the weekend. And for those who celebrate Easter this weekend, happy Easter to you and your families. And we will see you in the next video, which is going to be sometime between Tuesday and Wednesday in the middle of the week for another possible market update or an educational video. Take care.